Welcome to the Cash Flow Academy podcast. I'm your host, Andy Tanner. This is where we make investing fun, simple, real. Today we're going to simplify by talking about cryptocurrency a little bit. We've got Vijay Selvin with us. He worked for Goldman Sachs for a number of years. He's got a law background. He has a book, The Principles of Bitcoin, Technology, Economics, Politics, and Philosophy. So that's covering a lot of parts of a lot of sides of the Bitcoin, you might say. Make sure if you enjoy this content, like, subscribe, hit the notification bell, and always remember to go to cashflowbonus.com for free stuff from me to advance your education. We make it simple. And with that, Vijay, welcome to the program, and thanks for being with us.
Thank you for having me, Andy. It's really good to be here.
So let's begin with basics. No one says I have 35 years of experience in Bitcoin. So let's start back with your beginning, kind of your brief upbringing and how you landed in the space that you did, how you got to Goldman, law degrees, stuff like that.
Sure. Yeah. I mean, yeah, lawyer. I'm an attorney in the U.S. and also solicitor in the U.K. Started my career in London at a law firm. That was pre-2008. I worked on securitizations and CDOs and CMBSs and all the things that caused the crisis. And then I qualified as an attorney. I was an attorney at Davis Polk in 2007 to 2008. Worked on some bailout packages for different Wall Street banks and all of that. And then I joined Goldman Sachs in 2011. I spent about a little over a decade at Goldman Sachs in New York, and then I moved out to Hong Kong and Singapore. And I'm currently a lawyer at Gemini. In terms of Bitcoin, so I originally came across Bitcoin in 2013, reading an FT article. And when I think back, my reaction to it was exactly the type of reaction you expect from someone with my background, sort of all the kind of the right law degrees and the professional qualifications. It's a Ponzi scheme, with no intrinsic value, used by criminals. Governments are going to shut it down. Tulip mania, of course. That was the a staple description, right?
Yeah.
So I went through all of that. So that was 2013, by the way. It kind of blows my mind that in 2025, there are people who still say exactly the same thing that I was saying in 2013. But anyway, it is what it is. That was 2013. And then I went through several years of, rejecting it initially and then reluctantly starting to learn about it. Investing some, that I think focuses the mind. When you start buying some, it kind of forces you to learn about it when you have money at stake, and then finally actually understanding the gravity of the invention and putting it into perspective. So that was my kind of journey.
Well, fantastic stuff. Let's dive in. I think it would be. I mean, you wrote the book, not me. I mean, you wrote the book on the topic, so I'll let you guide a little bit. But maybe I'll ask this first question. I think one of the most important, protocols. For example, we a protocol for people who are not techie, which would include me. But you have a hypertext transfer protocol, changes how we use the internet. Now we have a World Wide Web. SMTP protocol changes. Now we don't have snail mail. We got email. I don't know if protocol is the right word for it. To me, it's more of a structure, a ledger. But you have this open ledger, decentralized, meaning that it doesn't reside with one power. It's spread across a vast network of computers. We have a blockchain. Why don't you explain how what a blockchain is, how it's unlocked, and I think with that beginning, people can understand. I think that's the big technology. Why we don't use that technology, for example, for elections? I think it would be the perfect technology for a fair and open election, for example. So we could use this blockchain for a lot of stuff, but I think that's a big breakthrough. So why don't we start there? Tell us about blockchain.
So I'm going to surprise you, Andy, and I'm going to tell you that I'm actually not a fan of the word blockchain.
Beautiful, even better.
So, and coming back, actually, I realized I didn't fully answer your first question. So when I decided to write this book, um, I wanted to write a book that, well, one of the things that really fascinated me, or I kind of spent a lot of time thinking about, was why people with my background, actually maybe our background from traditional finance, find it so hard to understand Bitcoin. And we do. We have historically, right?
It's
Why is that?
very new. It's so novel, and
Yeah.
but it's not abstract, but it is different for sure.
So, and I mean, I went through that myself, right? So, what I realized, I mean, there's several reasons, but one reason was, I think, the fact that there's this semantic satiation of saying, you say the same word over and over again, it loses its meaning, right? So
Hmm.
you've got, yes, Bitcoin, crypto, blockchain, and then NFTs and Web3, metaverse, and all that. Before you know it, you've stopped
DeFi.
asking DeFi. You've stopped asking the first principles questions. So my book is actually, I try to take it to first principles and ask, put aside the jargon, put aside distributed ledger, blockchain, ask the first principles question. What was the innovation here? Why does it matter? Right? So that's what I tried to answer in the book. So now, to answer that, I would just say, so what is Bitcoin? Let's, rather than what is blockchain, what is Bitcoin? Bitcoin is a digital bearer asset, right? And digital and bearer is, I mean, they're not meant to go together, right? Because like in the physical world, if I give you this pencil, you have it, and I don't have it anymore. You can take it and walk
Mm-hmm.
away from me, and you don't need anybody else to monitor whether I give it to you and then I give the same pencil to somebody else, right?
Because
Uh,
that possession, yeah.
because the laws of physics ensure that you have it and I don't have it. Now, if I send you a photo on WhatsApp or by email, I can send the exact same photo to 1,000 other people. Nothing stops me from doing that, right?
Right.
Because anything digital is ones and zeros. It's infinitely replicable, right?
Yep.
What Bitcoin achieved, and this is the 101 thing, this is what Bitcoin achieved. It enabled you to deal in the digital realm in ones and zeros as if you were dealing in the physical space. So without, I mean, in that photo over email example I gave you, the only way to stop me from sending the same photo to other people is if you had some other party monitoring my email and
Erase it
gatekeeping.
off yours. Yeah.
So you need that third person, you need a third party intermediary. What Bitcoin achieved was the ability to transact as if you were in a physical world, but in the digital world. That's the innovation, right?
That's well said.
Yeah.
And thanks for delivering on our fun, simple, real promise. That's great.
So I think you sort of, that's where you start. I think there's a lot of utility in thinking about it from that kind of big picture, and then you go further. How is it achieved, right? You go and that's why. So my book has its technology, economics, politics, and philosophy, and the idea is that humans are wired to think holistically, right? You rather than in silos, like the whole is greater than the sum of the parts. So if you look at only the one part, you just think about it as some kind of investment, then you miss the words like absolute scarcity, digital scarcity, censorship resistance, permissionless, and so on lose their meaning. I mean, they're just words. You have to understand the technology and how that's achieved for them to be of any value to you. Equally, thinking of it as an investment and as money, you're not going to appreciate it if you don't understand monetary history and where Bitcoin fits in the arc of monetary history, right? And then
Yeah.
equally, it's a similar thing with politics. If you don't understand, its utility for the unbanked, which is 1 in 4 people on this planet, or as a way to resist authoritarian regimes, across the world, then you miss that whole aspect of it. So that's what I try to weave together all of these aspects to create this multidisciplinary perspective on Bitcoin.
Let's talk about that. You touched on the idea of government, and that's a fascinating idea because government they're the ones that can take us to jail, and if your government's corrupt, that's really scary. They can use prosecution as a weapon, and corruption is I think one of the scariest, biggest threats to freedom you could imagine. And I look at some countries around the world, and they do. Let's look at also the danger of mismanagement of a country. Let's take Argentina. It might be a good example. I'm living there. I've got inflation. I don't have any confidence in my currency. I go work hard, and maybe I scratch out a paycheck, and I put it in the bank, and next thing you know, bread's up 250% in a week, and my money's just disappearing, or I should say my wealth and my buying power is disappearing. So hey, if I can circumvent that, I don't know that I'd call Bitcoin stable yet, because it has its own volatilities still. But certainly, if I see that as less volatile as living in Argentina, I absolutely, for the unbanked and for for people, but almost anyone who has a computer can get a bank. I mean, the unbanked might be 1 in 4 don't have electricity yet too. So I don't know what the overlap there is. But yeah, talk a little bit about that, about how much control, if my central bank says, you know what, I want to control this, I'm going to create a central bank digital currency, and the way I'll create demand for it is that's how you have to pay your taxes. So if you don't get some of this and then give it to me, you'll go to jail, if you have any wealth at all. Talk about those ideas, the idea of the risk of saying, well, I'm going to circumvent the laws of my own country in order to have Bitcoin. What would you say to a person who says, maybe someone like China says, not allowed to have Bitcoin? Would you advise someone in China to break the law and say, no, it's better if you have Bitcoin or something?
Yeah. So it's interesting that this is not a hypothetical situation. It's actually happened, right? Bitcoin's been banned in China. It's been banned in Nigeria. And if you look at a chart of the countries with most per capita adoption, those countries are top of the list, right? Despite the bans. So what I'll say to that is, Andy, so there's some level of irony in when people say, "Oh, governments will shut down Bitcoin." You shouldn't.
Some of them embrace it though.
So the reason is for some level of irony there is that people miss the point that Bitcoin was created with the assumption that it would be banned at some point, right? Because Satoshi's original objective was to create censorship resistant money. He was trying to create digital gold. He was thinking about Executive Order 6102 in the United States, right, where FDR confiscated gold from the citizens of America in 1933, right, April 5th, 1933. He was trying to create unconfiscatable or confiscation resistant gold, right? So my point is that the underlying assumption was that if you're trying to disrupt money, you are going to be attacked by governments at some point, right? And so that was the whole thinking behind decentralization. So if you don't have a single attack point, then you can't shut it down. And so there's so many aspects to that. Like, how does he achieve that? So for one, Bitcoin runs on the internet's TCP/IP protocol. That's the base layer of the internet. So there's no way to stop it. The only way to stop Bitcoin there, to some degree, is by shutting down the internet, which is not economically viable, right? And even if you shut it down, the crazy thing is you can still transact. There are ways to transact in Bitcoin using SMS messages, using ham radio. There's Bitcoin satellites right now that you cannot stop peer-to-peer transactions on Bitcoin. It's the horse has left the stable. It's not possible to stop that.
Is there any record of anyone been put in jail for these? I mean, I know that, like you mentioned, China. I think it was Guatemala said, "No, we're going to make Bitcoin the big thing." But
Yeah.
so yeah, both extremes on both countries, on or for countries with both extremes. Has anyone ever gone? I wonder. I've never asked this of anyone. I've never Googled it. Never asked
Oh,
the internet.
absolutely. People are absolutely persecuted in different countries. I mean, people have been put in jail in Nigeria, but that's because of their own failings on in terms of privacy or whatever. They might have been talking about it, or they might have kept
Their
this.
fault for getting caught.
Yeah, I mean, it's if you use it correctly and you have appropriate privacy policies, what happens is, so you just take what happened in Nigeria. It was banned. What happened was everyone immediately moved into the peer-to-peer kind of level of Bitcoin, and you just
Hmm.
transact here um, on the internet or using SMS or whatever, and that becomes censorship resistant. You can't really stop that as long as you're doing it in a private kind of manner, right?
My when Bitcoin was probably uh, hovering around $300. So this is a long time ago. I can't remember what year it was, but it was $300, and it was starting to make a lot of noise. And I started getting, as a teacher, as an educator, I started getting questions about it, and I couldn't really answer them because I had no idea. So I thought, well, I better at least. And I've always felt the best way to learn about something is just go do it. Sometimes that's been to my advantage, and sometimes that's been to my detriment. But I thought, $300 is anything. Let's just go buy one. It's cost you $300 to go to dinner. So I go, let's go buy a Bitcoin, and I, had to figure out the wallet, and I had to figure out where to get it, and I set up stuff probably with Coinbase and like 5 others trying to figure it out, and so I go out and I buy some Bitcoin, and then I kind of forget about it. I'm busy. My attention goes elsewhere, and then I'm browsing somewhere, and I see a thing that had hit $10,000, and I said to my wife, I said, I swear I bought some of this because I wanted to learn about it. So I'm digging through keys and passwords and emails and trying to figure out, looking for pocket change in the couch, and sure enough, I found it, and there it was. So then I transferred it to a better place to trade it, and I started selling. I started selling options on it because that's what I do in stocks for cash flow. And from an options market standpoint, it's still like this. And I think my prediction is it'll get better. It's not nearly as liquid as you would hope it would be. Premiums have really wide spreads. It's not. It hasn't found the efficiency like you would in a SIBO yet. But nonetheless, I build a little class showing people. I said, look, I'm going to get paid like $2,000 to promise to buy Bitcoin cheaper than it is today with a put, or I'm going to make $2,000, on one coin, per coin, by promising to sell it at a ridiculous price with a call, and it was a magnet for people interested in that were already doing Bitcoin that didn't know they could they understood Bitcoin but not options. So I did that for quite a while. So I do have some Bitcoins. Some I kept, some I sold. But it's been interesting to participate in it. I also bought a pizza in it just so it would work. Bought a little. I found a coupon that someone would sell me Bitcoin. Sure enough, it worked. So I've used it that way. But tell me about this. I feel like I don't even know if it should be called a digital currency because of how it moves. Now, it certainly has a current, it moves, but it seems to be more a very efficient way, much more than a bank, to transfer large sums of wealth, but it hasn't quite found the utility on the retail end yet. Is that going to happen?
Um, Let me comment on the volatility point, and then about the medium of exchange. I think is your second question. Um, on volatility,
That'll
um,
settle, right?
look, the path of disruption is volatile, right? I mean, I like people who how were you expecting Bitcoin if it were successful in disrupting money? How could it disrupt money and still be in sync with the dollar, right? It doesn't make sense. It's not a stable coin, right? Bitcoin is not a stable
No,
coin like kind of linked to the dollar. It's creating
no.
its own system, its own value, its own monetary policy. Of course, it was always going to be volatile versus the incumbent, right? It goes without saying. And like I said, the path of disruption, it doesn't go, it's not linear. I think again, like humans think in very linear terms. They don't think in disruptive exponential terms, but that's how disruption takes place, right?
Yeah.
Um, and I'll also say the volatility is falling, but it's also very short term, right? If you look at, have you ever looked at a 4-year moving average of Bitcoin?
Not a 4 year.
So
Probably
4 year,
200 days. Yeah, 200 days probably about as far back as they go on a moving average. But
so
a
4
4 year would
years,
be really interesting.
4 years is useful because it's the halving cycles, right? But also, I mean, frankly, like if you're looking at something that is, a long-term inflation hedge or investment, you should be looking at, and you're a young person, you should be looking at 5, 10 years, right? So 4 years, I think, is quite useful. If you look at Bitcoin's 4-year moving average, it's a 45-degree line that is very, very stable, no, almost no volatility, and it has never
Mm.
fallen. It just keeps going up, right? It's a very useful chart, and if you're like really obsessed with it or kind of captivated by the volatility, looking at that, you just think, oh, actually, you know what? It's been the best performing asset, and if you look at it over a long term, it's pretty stable, right? So it's all about the way you look at it rather than what it kind of is, right? Um, Medium of exchange. Um, there's so if you think about the path of monetization of different monies through history, right? They always go through different phases. Um, so typically, they start off as collectibles, okay, and then people collect them and they seem to have value. Then they move into the store of value kind of phase, and that takes a long time for that to really progress and get entrenched. Only when that process is complete, when people have really adopted it as a store of value, then you start moving into the medium of exchange phase. And finally, when that has run its course, you go into the unit of account phase, right? So we have now passed the collectibles phase. That was the first few years when it was this cypherpunk, kind of quaint little thing out there.
Hmm.
We're now in this very early innings of the store of value phase, in my view, right? If you think about there's $900 trillion of assets that are looking for a store of value in the world, right? That's kind of what's like real estate, stocks, bonds, and all of that. Bitcoin is $2 trillion. Gold is over $20 trillion. I would say it's in the very early stages of that path. Um, so I'd say that that needs to happen, and only then you move into the real medium of exchange. Because right now, have you ever read about Gresham's law?
Yes.
So Gresham's law is you hoard the good money and you spend the bad money, right? If you have Bitcoin that's appreciating at what 50-70% per annum, you're incentivized to just hold it. Why would you buy your coffee with it or groceries with it, right? You just hoard it. Just like people hoarded gold and spent silver, right? So maybe that's what's happening right now. There's no
That
incentive
could be.
to just spend it. You just want to hoard it.
No, that's a viable idea. What before we go to a short break, I'm going to and I appreciate your time. You said we could go a little beyond, so we'll
Sure,
definitely do that. Take advantage of that offer.
sure.
I'll tell you what I love about Bitcoin. First, I love the decentralization of it. That's a really cool thing. As I said at the opening of the show, the fact that it's verified across a network with an unbelievable amount. I mean, to hack that would be just unimaginable. I mean, it'd be very, very, it'd take a supervillain to be able to do that. It's just so solid, which is why I think we should use it to vote. So I love that. It checks a lot of the boxes for a currency. The fungibility of it. It really does check the digital gold boxes for sure. I think it's a possible. The reason I still have some of it I think it's a nice hedge against other assets. The more the more things you have spread out that way, as the dollar becomes volatile, it could really explode. If the way we're printing cash, I like it for the idea that if you look at the United States, my home country, the fiscal irresponsibility, I think it puts the dollar somewhat in jeopardy. The dollar could be removed as the world's reserve currency. There's a lot of people that are, especially in Asia, that are saying, "Hey, we don't want to deal in dollars. Why does the U.S. have this petrodollar?" So there's a million reasons to like it. Gold. The problem with gold has always been the same: is it's heavy and you got to protect it and you got to store it, and you can't carry it around, and the portability of it. If I was going to use my passport and I say, "Hey, I need to leave somewhere," I better have a big chain like Mr. T, melt it down to wear it on the plane, which just isn't viable if you have lots of gold. So, there's so many good things about it. And a lot of my mentors are all about it. I mean, they say this is it, and they've drank that Kool-Aid, and they're saying this is not going away. So when we come back, what I'm going to do is I'm going to share with you how my thinking on it has evolved a little bit, and then you can tell me and you can straighten me back out. So we're going to take a short break, and when we come back, I'm going to try to throw some curveballs at Vijay and watch him hit him out of the park. In fact, I won't even throw him curved. I'll lob them to you. But we'll be right back.
Responsive to questions, they're very detailed in their training. You can start from no investing experience whatsoever and get educated and be able to make a nice retirement for yourself or even a living. It's an amazing educational system, and I would highly recommend it. The one thing that will get you more confident in investing is your education, your competency, and if you can get to that point, you can do anything.
Welcome back to the Cash Flow Academy podcast. Fantastic discussion. We're discussing a very important book. It's called The Principles of Bitcoin, Technology, Economics, Politics, and Philosophy. We have Vijay Selvin with us, attorney, worked at Goldman Sachs, written a very important, I loved your opening metaphor, or I shouldn't call it metaphor, imagery of a physical transaction, digital duplication, and kind of the melding of that idea. Brilliant simplicity. Smart people make things simple. There's much more genius in simplification than that's a sign of genius. So that's wonderful.
Very generous.
Where I've evolved is when I look at a financial statement and I say I'm going to buy an asset, I usually have a goal for the asset. And the first goal, I think the best asset you can possibly have are assets that are production. They're geese that lay golden eggs. And you have this thing that's simply by ownership. Warren Buffett says, calls it, refers to it this way, which I just love. He says, if you can believe in American business and just simply find the lowest way to participate in that business. What's the lowest way to participate in a business? It's ownership. I'm not driving the cars. I'm not doing the manufacturing. I'm not the CFO making financial decisions. I'm just an owner and getting a dividend, right? And so the idea of production, I love my rentals. I have leverage. I have tax advantages. But most importantly, I have a renter. And it's producing cash. So I can enjoy volatility and kind of do the same thing you were saying is, I can get a report. Zillow will send me an email and say, oh, this particular property, fell this much or it went up this much. I'm like, well, that's nice, but I want the eggs. I don't care what the price the goose does and what people's opinion is on my goose. I just want its eggs. So that's the first category of asset. To me, it's the best. Anything you can just buy and then it produces new cash is a great asset. Okay, second one is more speculation. It is the egg. It's the golden egg. And there's two ways I can treat that. I can say, well, I'm a real good technical analyst, and I can kind of see what's going to be valuable and what's not. I have those, crystal ball glasses that some guys have, and I'm going to buy low. And then I'm just going to know when to sell it high. To me, that's a tougher game. I certainly play that game in the stock market, particularly on the short side. When I see a company in trouble, and I see its financial statement, I see it's going to struggle, I don't mind speculating a bit and selling high and buying low. So there's that aspect. The third thing that I'll look at when I'll buy an asset, and this is where my gold lies, my physical, is hedging. If a whole asset class goes to hell, well, I've got a pretty stable, insurance policy. And so the irony is people ask me how much gold I have, and every once in a while I'll go out and, update my ledger if I buy some more and count it. But really, when I buy gold, my hope for that asset is to never make a dime off it. If I sell my gold, that means I'm in financial trouble, right? If I sell my gold, that means the dollar is in trouble, right? So the gold is what I hope I pass it on to my kids, and I never get it back. So where does Bitcoin fit? I think it fits best in the hedge category. But what is my? You mentioned utility. What's my utility of Bitcoin? If I say I'm going to build a position in it, what's my goal?
Yeah, look, I think there is no substitute for going out there and creating value in the world. So what you described, the category one, if you're a young person of any age, really, if you're, working and, able-bodied, your job is to go out there, use your intelligence, your skills, and your physical strength or whatever it is, and create value in the world. No Bitcoiner is telling you that you don't need to just buy some Bitcoin and you don't need to do that. Anyway, you need to create value in the world, right? Bitcoin is solving, where do you store that value once you've received it, right? Do you store it in a melting ice cube, which, like a currency, which in developing countries is inflating at maybe low double digits annually, some countries inflating at over 100, like triple digits or more, right? Do you store it there? Or do you store it in a absolutely scarce digital gold commodity? So that is the problem that Bitcoin is solving. It's not saying you don't need to be productive.
Why would I want to store it? Because wouldn't I want it to work? I mean, that you can work for money or have money work for you. And to me, compounding is reinvestment. So let's say my goose lays an egg. Why would I want to just store it and store the egg? Why wouldn't I want to buy another goose that makes even more eggs, so I have more goose?
So if you can find a goose that lays eggs that generate more than 70% annualized, and you're sure of that, then you should do that, right? But most of the world aren't as sophisticated as you or your audience, right? So for such people, it's you either put it in your peso.
So you say it's capital gain. I need to store it here because it is going to grow.
So what Bitcoin has done is it's introduced a hurdle rate, right? So now a hurdle rate of return.
Oh.
So you've got to. So if you're investing in a stock or some business or something that you think is productive, you now need to ask yourself: is my money better off in Bitcoin, appreciating at annualized rate of 50-70%, or am I going to generate a better return in this particular whatever venture thing that I've found, right? So if you feel confident enough and you have the expertise and ability to find those opportunities, then you should do that. But Bitcoin and its historical rate of return and the rate of return that people expect it to return as it progresses through its adoption cycle is likely to really challenge those other investment endeavors that you might embark on, right? So I think
so. From a capital gains standpoint, I couldn't disagree that you're going to have to speculate on what you think Bitcoin will do, and you're going to speculate on what you think Coca-Cola would do or whatever. With the difference that you wouldn't be expecting a cash flow. I like the safety. Jeff Bezos said something that I've been repeating lately that I thought was really well said. It's something I've known for a long time, but I just like how he said it. He said it better than I've ever said it. Someone asked him a question. He said, Jeff, what do you think the biggest changes, are going to come out in the future? And he was really smart in how he answered the question. He said, well, that's a great question to ask. We're always interested in what may change. But he said A question that we might ask before that is what won't change? Because if you can determine something that doesn't change, well, now you've got more of a solid place to build upon, and you can see the future better because now you're counting on something that's true. So the illustration I give people on that, and how I tell them, I'll tell you how I would position myself to get rich with Bitcoin, because I think it's the safer route. You mentioned that, well, not everybody is sophisticated. Well, that would be my first answer, is becoming sophisticated might be more valuable than, I could hand you $100, or I could offer you $100 right now, or I could offer you more sophistication. What's more valuable? Money or sophistication? And I would say education is far more valuable than gold, Bitcoin, stocks, real estate. The real estate between your ears is really where the money's generated. So that's the better investment is, well, they're not sophisticated. Well, become sophisticated, right? Read Principles of Bitcoin and get smarter, right? That's your better investment, is go to Amazon and buy that with some money. So that's all just fine. The second thing, though, is if I go to Costco and I go there on a Saturday, what direction does the cash flow? I don't think about the currency as going up and down. I think about it kind of more lateral, like where does it move, right? Not the value up and down, but where does, you mentioned, you take a picture and you send it and then it disappears here, and it's a transfer, it's a movement. So when I look at the movement of wealth in general, not Bitcoin, not gold, not currency, just wealth in general, what direction does it go? And how will that never change? Well, if I go to Costco, people are going to show up with something of value in their wallet, digital or physical or gold, or trade me for feathers. But they're going to come up with the intent of trade to get rid of what they have. And in recession, it's going to go to the producers. In times of plenty, it's going to go to the producers. In times of stagflation, it's going to go to the producers. There's never a Saturday on Costco where the direction changes. The volume might change. Oh, I'm going to skimp a little bit. Times are tough. So I think if I want to be wealthy, I absolutely should prioritize. If it's the best way, and it's the most stable way, and it's the way that it won't change, why would I want to not accumulate as many shares of production and real estate as I possibly could? Because if I was on a desert island and I had all the Bitcoin and you had all the production capability, it's only a matter of time to where my Bitcoin goes into your pocket. Because if I'm a consumer, whether it's my Bitcoin or my gold or my silver, I'm going to go there. So what's wrong with me building a massive real estate portfolio, a massive stock portfolio, and a massive business? And if Bitcoin really gets big and it kind of overtakes everything, I say, all right, I've got all the production. I'm going to shift from dollars to where I don't have to work anymore to Bitcoins to where I don't have to work anymore. And I just treat Bitcoin just like a currency. And I say, it's not the currency I'm after, it's the asset that draws the currency. Well, if it's feathers, then I'll start charging feathers. If it's Bitcoin, I'll start. But I feel I have the better position of power to force the Bitcoin owners to hand over their Bitcoin to me, because they need what I have more than I need what they have. Tell me, what's your pushback on that philosophy?
So on your first point about education, 100% agree with you, Andy. But I will say that there is an element of, if I may say so, privilege in being able to say that. If you're a janitor or a waiter in Argentina, okay, or Iran, or India for that matter, where many parts of the planet, and by the way, people in this kind of predicament represent the majority of humanity, right? You don't really have, firstly, I don't think you have access to that. You might not even have access to such investments, real estate, stocks, and so on, if you're in that kind of strata of society, right? So what do they do? So maybe they can buy gold. And by the way, gold has outperformed the S&P 500 over the last 25 years. right? I'm sure you're aware, even taking into account dividends, since the year 2000, 21st century, as of now, with the recent rally, gold is actually, I think gold is up something like 9x since 2000. S&P 500 is up about 6x, right? So I think my point there is that if you're sophisticated and smart enough to find that kind of, it's complicated to find the right company that's not going to go bankrupt, that's not going to have some corruption scandal, that's not going to get disrupted by some competitor, or some piece of property that's not, I don't know, going to get confiscated from you, or just being able to access it in the first place. If you're sophisticated enough to navigate all of those pitfalls and acquire something that's really productive and that can produce those returns, then good on you, well done. But I will say that the vast majority of the world is really not in that position to be able to do that. And then the second point, sorry, just quickly, I'll say, again, I'm not, like I said, you have to produce value in this world. You have to find ways to be productive. I'm not detracting from that. Without that, humanity is not going to progress. You wouldn't even have Bitcoin if people didn't want to push boundaries and create new stuff, create value in the world, right? So I'm not taking away from that. But sorry, just one point, Andy. The market for a store of value is the largest market in the world. It is something like $950 trillion, $450 trillion. Real estate, bond market's about $350 trillion, stock market's $150 trillion, something like that. Gold is $20 trillion. This is a store of value play. It's where when you've been productive, you've generated some kind of value, you've received the fruits of your labor. Where can you just put it and be sort of assured that it's not going to get inflated away, and that it's going to preserve value over time. It's going to have temporal saleability, which is a key attribute of a good money, right? And
I would think it's really the key to Bitcoin is going to be confidence. Any currency is really tied to whether people believe in it or not. Yeah. So, if it's immune from losing confidence, if there's immunity that people wouldn't lose confidence in it, that's a pretty big play. You mentioned being replaced. If I buy Coca-Cola, I'm Warren Buffett. Let's look at Buffett. $3.25 a share is his cost basis. Dividends $2, so that's pretty good. Return on investment. But that's 1886. What company is going to go and replace Coke? Because it survived World War I, World War II, Vietnam War, 60s peace and love, dot-com bust, and recently COVID, and they sell 2 billion drinks a day. Mm-hmm. Where's the lack of confidence in that? Is there less confidence in a company like Coca-Cola than there is Bitcoin? Which one would you say is more likely to be around in 100 years?
I think they're different plays. Well, firstly, coming back to my earlier point, do you think does Coca-Cola return 70% annualized? Do you expect to return that?
It does not.
So Bitcoin produces a better return than that. But
so it's just the bet that Bitcoin's just better capital gain play right now than anything.
I think people who believe in it have just done the analysis of monetary history, right? They've studied Austrian economics. Okay, they've read about Karl Menger, right? Money is not a creation of the state. It is a commodity. It is the most saleable, the most marketable commodity is what evolves naturally in the free market as money, right? And what are the attributes of money? Portability, scarcity, divisibility, verifiability, durability, right? Bitcoin scores very highly on, it's almost perfect on a lot of these, except maybe durability. Well, durability too, but maybe not history, because gold's been around.
It's too new to have history, so.
Yeah, so and something disruptive obviously is not going to have. It's by definition, it's something.
For sure, it's novel, so we wouldn't have history.
So I think people have studied it, and they've come to the conclusion that it is the best money based on these monetary attributes, and therefore over time it will continue this path of adoption. And that path, just looking at the numbers, is likely to produce the best bang for buck, the best return of any asset, and it has done so. It has been the best performing asset over a 15-year period in history, right? And many people will say that it's just in its very first innings. It's got a long, long way to go in that S curve adoption cycle.
That's a good way to segue to probably another question that is a tough one. And I get in arguments with this. This is probably the number one. Like, if someone were to come to me and my best asset, well, I really play in 3 asset classes. I play in business, I play in stocks, and I play in real estate. I own gold, but I don't play in it. I would love my next one. I really want to learn more about oil. I'd like to buy some oil wells. I think energy isn't going away. We just need more and more of that. And as I mentioned, I do have Bitcoin. So I'm not talking about an asset that I don't own. Like I mean, the biggest reason I got Bitcoin is A, it seems like a decent hedge. B, the scarcity. I mean, there's going to be more millionaires than there will be Bitcoin owners, and there'll be a point where a millionaire can't afford a Bitcoin, right? The scarcity of it. So if that happens, I think that's a nice roll of the dice. But it's one of the smallest allocations that I have where other guys are loading up. And so when someone comes to me and asks me about stocks or real estate or business, particularly stocks, which I'm probably best at that, the first thing I'm going to tell them is how they're probably going to lose all their money. The first thing I start with is I go, let's talk about risk, because investing is probably less about your crystal ball and more about your hedge, your defense, your exit, your role. You know, what is your plan B? Because I can absolutely tell you why people make money in stocks and why many people lose money in stocks. I've never seen an asset class that doesn't have its winners or losers. That's why I still come back to sophistication. Even if I go into the realm of crypto, the more sophisticated people will have an advantage over the less sophisticated people. The dogmatic people are the ones that have the boom and then they get crushed. Dogma will crush you. So tell me what the pitfalls of Bitcoin are. Tell me why I can tell you why stocks are risky and options are, risky and real estate is risky and there's pitfalls in there. What's my Bitcoin pitfalls? What should a guy watch out for? How do I lose my short shirt? What's the risk? What's the risk of it?
Yeah. So there's an entire chapter in my book titled "How Do You Kill Bitcoin?" So that's kind of, and I go through the different scenarios. And I mean, I know a lot of people say that Bitcoiners are very dogmatic about it and they're very religious about Bitcoin and so on and so forth. It's maybe, true to some extent. But I'll also say that I don't think there's a community of people who are more paranoid and self-reflective and introspective than the Bitcoin community. And the underlying philosophy of Bitcoin, do you know what it is, Andy? It is don't trust, verify. Or trust in numbers, vires numeris in Latin, right?
Yes.
So only trust in things that are mathematically provable. Don't trust someone because they say it's a good investment or something.
Yeah.
So there may be some kind of religious fervor about their belief system, but it's typically, prominent people in the space have gone through that analysis. So, I mean, you can read about, the 51% miner attack, software developer attacks, quantum computing is a potential risk, right? Quantum computers being able to hack ECSD cryptography, which is the public key cryptography. Your address is, secured using that type of cryptography. There are initiatives right now. They called BIPs, Bitcoin Improvement Proposals, where you propose a developer, kind of a particular improvement to the protocol, and then it gets adopted, and that's already underway. They're looking at transitioning to a quantum resistant protocol. There's government bans. We already talked about that. I think that is. I mean, I don't know if people still think that Bitcoin can be banned. I mean, like I said, it has been banned. I think in America for Bitcoin to be banned is almost inconceivable after it's been approved as an ETF for retail distribution, for inclusion in pension funds and retirement accounts and the president of the United States is talking about adopting it, kind of all of that. I think again the horse has left the barn on that front as well. It's pretty
It's
inconceivable.
going to get bigger. Yeah, it's going to
Yeah.
get bigger.
And then there's this, which I think is potentially the biggest hurdle, mental kind of blocker is, what about other crypto? What if there's another Bitcoin? There's a better Bitcoin that comes along, right? I don't know if you.
That's actually a very legitimate question. But
Okay.
let's not move on to that one. I'm
Yeah.
still not clear on what my
Okay.
risks are.
So I would say, and I joke about this, but the biggest risk to Bitcoin is fiscal prudence by central banks. So if all of a sudden all the central banks, not sorry, fiscal is the government. So monetary policy prudence and governmental fiscal prudence around the world will probably kill Bitcoin because
Hey, that's interesting. I think
it
that
won't
would
kill it.
boost
Nothing
Bitcoin.
can
So
kill
I would
Bitcoin.
think that would boost Bitcoin. So I'm interested in this.
Well, so if you look at a chart of M2 money supply
Yes,
versus all risk assets, including Nasdaq, S&P,
everything.
and of course Bitcoin. Bitcoin has the highest beta versus M2 money supply. So what I
Right.
mean is the central banks all of a sudden stopped, printing money, and governments went to austerity, which is what Powell did, by the way, right? I mean, in 2020, I
You
mean, why?
had to. There's too much inflation. Yeah.
Yeah, so Bitcoin crashed mainly, well, almost entirely because interest rates went up, and you moved into a very austere monetary environment, right? Monetary policy environment.
That's interesting you bring that up because part of the argument of Bitcoin is if because that also is messing with the dollar, right? And so, wouldn't Bitcoin just be an insulation from that volatility? Why would it? Why wouldn't Bitcoin? Why would Bitcoin be damaged by fiscal irresponsibility? Wouldn't that boost it? Wouldn't people say, "I don't want to mess with the U.S. and the dollar. Bitcoin's safer."
Right. So sorry, I meant fiscal responsibility. I was being funny. I was sort of ironic about it.
Oh,
If they were responsible, that's a danger to Bitcoin. So Bitcoin thrives off
if
of
the dollar becomes more sound, you're making
so
the opposite.
if
Yeah.
central banks became more prudent, really prudent,
Okay.
about printing money, if the debt of $40 trillion debt all of a sudden, disappeared due to like amazing productivity and
Well,
austerity.
there's no risk that I see of government prudence,
So then I think
so
there
I
is no
think
risk
I'm
to
okay.
Bitcoin.
Yeah, that would be. Yeah, that would be. There's no risk of the government getting smarter. Their record has not been good at all. So that's pretty
So
good.
I think if you look at historical, like those types of environments have been the greatest threat to
Yeah.
Bitcoin. Um,
I think you brought up and we'll finish with because I love talking about the risks because people don't want to come in and hear us sing to them now. They want someone to challenge it so they feel better about moving forward. They want to, have a cross-examination, if you will, to use a law term, to say, look, I want to cross-examine this. I want someone to ask hard questions about Bitcoin so I can see that they can be answered well, right, and answered with confidence. Here's probably the one you touched on that I think is a really hard argument. So when I was a kid, I remember the first CD. I was in college, and I bought a CD player, and I bought some CDs, and the sound was unbelievable. And now instead of having these tapes, I had to reverse and rewind, and add these CDs. And then they came out with the DVD. I was like, you can put the Library of Congress on this. This is it. This is amazing. And the one thing that I think if you look at trends, if technology, to say there will never be a better mousetrap, I think is a leap. Remember Netscape? Now hypertext transfer protocol still here. That hasn't left. But Netscape was it, right? Gone. WordPerfect, gone. Palm Pilot's gone. Quattro Pro, gone. And if you look at ETH, there's things ETH does that Bitcoin doesn't. There's probably more, I wouldn't say utility. Well, ETH could be a store of value, just like Bitcoin could. I mean, there's there's nothing Bitcoin does that ETH probably couldn't do, and maybe ETH can, get some programming in it where it can be a little, algorithmically, it's probably more flexible. Maybe that's the way to put it. Maybe it can do more. But the biggest threat to Bitcoin is the technology we haven't thought of yet. And when quantum computing comes along, with AI comes along, I can say, hey, AI, man, this guy thought of Bitcoin. Can you do better? And I think the answer to that is going to be yes. I think that we should not be surprised 30 years from now to say, hey, remember Bitcoin the same way we say, remember Netscape, Quattro Pro, WordPerfect was the future of word processing. I mean, no one was going to improve on that, right? It was hugely revolutionary to go from the typewriter to the word processor. I mean, my gosh, they were going to change. But we have different, versions of word processing now that are more superior. So with the exponential nature of AI and the development of technology, how does Bitcoin fight obsolescence risk and the better mousetrap that, we can't say it won't be invented because it hasn't been invented yet?
So the first thing I'll say is that Bitcoin is different from crypto. That may shock you.
That is true. That is true.
And here's why. Bitcoin is the only cryptocurrency that offers absolute scarcity, which is a fundamental requirement for money. Ethereum does not. Ethereum has no supply, and no other. Just putting it down in a white paper that this is capped or something doesn't. Bitcoin scarcity doesn't arise from its code. It's not from C++ code. Bitcoin scarcity arises from game theory, incentive design. Right? Bitcoin is not. Again, it's not just something you can copy and paste and Bitcoin is 100,000 nodes, okay, 1 million miners spread around the world, over 100 million users, billions of dollars of mining machines that have organically been distributed around the world over a 15-year period, and as of today, over $2 trillion of humanity's wealth being secured within that network. That is Bitcoin. That is path dependent, and it is a one-time invention. Digital scarcity is a one-time invention. Were you about to say something?
So, well, I just, it was interesting because, this number, I could say, well, this DVD has 650 megabytes. I mean, it's astounding when you think of that number before you knew there would be a terabyte. And further and further. I mean, it's just getting smaller faster. So, what is there? I mean, I believe that, the printing press was kind of a one-time thing and it's still around, right? Internet was a one-time thing, was still around. But to say there's not another technology that will be superior, what if I find one that doesn't need electricity to run?
Yeah. So Bitcoin doesn't though. Bitcoin, as I said, you can transact over SMS messages and so on. So it's a set of factors or forces that come together that need to be studied, right? So you have a first mover advantage, network effects, right? Economic value always concentrates on the most secure monetary network, right? And that is Bitcoin. It then becomes a virtuous cycle. Right? Because more security leads to more investment, and more investment leads to more mining and security, and it's a virtuous cycle. There's other factors like the 10x improvement rule. Okay, so we talked about the attributes of money earlier: portability, scarcity, divisibility, verifiability, and so on, fungibility. Right? The 10x improvement rule says that in order to disrupt the incumbent, the disruptor needs to be at least 10 times better than the incumbent. Now, how do you improve on Bitcoin's portability even marginally, let alone 10%, or its scarcity or its divisibility? These are it's a finite set of monetary attributes that Bitcoin offers, and it is very hard to even conceive of something that improves on these 4 or 5 different monetary attributes. That's why it's important to think of it in
That's
terms of.
important. That's an important distinction. Hard or impossible? That's the big question, because we do hard stuff all the time. It
So
would have been hard. I mean, it would have been hard for us to believe we could improve on the DVD when we invented it, right?
I think they're completely different things, Andy. I mean,
Okay.
I mean, I'd encourage you to sort of. I discuss it in my book. You talk about each one of them. Portability. I mean, I can walk across. I can like jump on a flight and go across from New York to Tokyo with Bitcoin in my mind, right? I just memorized my 12 seed words.
Yep.
Can you improve 10x on that? I don't think so, right? That you've solved portability, divisibility. Bitcoin is divisible into 100 million, satoshis. That's perfect. You don't need any more than 100 million, or you can actually further divide it if needed, right? Scarcity, we talked about that, like 21 million, right?
Right.
Changing, and this is driven by, again, it's not from code, it's from incentives, right? I mean, a good analogy for that is can you change the rules of chess? Like you and I can agree, Andy, on this podcast that the pawn can only move diagonally, or the king
Right.
can
Right.
now move across the board like the queen. But good luck convincing. No one's going to play with us. You and I, the only ones who are going to follow these rules, right? So changing the rules of chess is a good analogy for changing Bitcoin supply cap. It's all driven by incentives, economic incentives, right?
Yeah,
So
I mean, I guess the only final pushback I'd give is, chess is not what, now kids play, Warcraft. It's just a more interesting game. Chess is nice and it isn't going to change, but my kids don't play chess anymore.
oh yeah, and yeah,
I'll tell you what I think. I'll tell you what I think the most important thing someone can do if they want to get into Bitcoin. They should invest in a book called Principles of Bitcoin, Technology, Economics, Politics, Philosophy. And I'll tell you why. I really enjoy the opportunity to kind of throw softballs, curveballs, whatever, and have you hit those out of the park. Because if someone's really going to be serious about cryptocurrency or Bitcoin, they're going, whatever it is, you're going to have sophistication. There's going to be sophistication in every asset class, and if you're going to play in that asset class, you want to seek to be as sophisticated investor as you can. And a great way to do that is to go buy Principles of Bitcoin, Technology, Economics, Politics, and Philosophy, so you can know what questions to ask and seek the answers, because there's one thing that is not up for debate. Bitcoin's a big deal, and it's a huge deal. And anyone who is interested in investing, it demands our attention, it demands study, it demands scrutiny, it demands learning. And so go pick up at Amazon Principles of Bitcoin, Technology, Economics, Politics, and Philosophy. It's so important to do that because the upside's so big. And while I will, if someone's on here, I'm talking about real estate, I throw them those curveballs, because people need to know that their risks are identifiable and manageable when they get into an asset. If someone is brand new to Bitcoin, they're nervous about it, I'll give you the last word. Tell them why they need to buy this book.
yeah, I would say the holistic exploration is probably the main reason, because I don't think that has been done before in the way that I've attempted to do it. It's not necessarily the case that technology, economics, politics, and philosophy are the only aspects of Bitcoin, but I think it's a good starting point, and it gives you a good perspective, and will help you realize that the whole is greater than the sum of the parts, and it's only by that holistic appreciation that you truly understand Bitcoin.
Fantastic stuff. Please hang out after I close the show so I can properly thank you. What a great interview. Way to be willing to delve into the questions about it. Just fantastic. I so appreciate it. Drop by Amazon, pick up Principles of Bitcoin, and also drop by cashflowbonus.com for free stuff, free education. Go get the book. You've been watching and listening to the Cashflow Academy podcast. We'll see you next time.